Had to go quick with the play clock running down. He did. It's a boot. Purdy pulling back, stepping forward, throwing on the run, touchdown! What a play, Purdy! Get
And we are live, everyone. Welcome to the show. It is a new week and the last trading week of the entire year. And where's Santa? I don't. You guys know where Santa is? I have no idea where Santa is. He's definitely not in the markets today at all. I mean, actually, it was a little bit worse this morning. But let me go ahead and share my screen over here. I mean, we've had better days, right? There have been a lot better days than today. I certainly was not expecting the Qs to be down about 50 basis points, but here we are. I mean, it's just, what can I say? I mean, at least path is green today. They're going to be entered into the S&P 400 mid caps starting on January 2nd, the first trading day. Zeta is almost green, but it was actually a lot worse earlier today. I think it was down about 5% earlier today, so that's recovering pretty nicely. On Semiconductor, not exactly having the best last couple of days. It's actually been quite of a downtrend. We'll take a look at some charts later on. BMR is actually green today, but it would have been a lot more green had Ethereum stayed above 3,000 and Bitcoin was above 90,000 for a minute. And of course, your boy did in fact jinx the entire thing. So that the entire fall from crypto since last night was what? Oh, whew. I have my mic was like always every single time I do one of these shows, my mic is always laying on. My mic is always laying on the table there. But yeah, I hope you guys enjoyed that intro. I mean, yeah, sorry, dude. You must have definitely gotten triggered on that one. You're lucky I didn't play the last one because the last play was actually a lot worse. But it is what it is. Yeah, I know. You know what? I don't know. Santa didn't show up for this. Actually, so far this week he didn't show up. This is actually when Santa Rally was supposed to start last Friday. Last Friday was flattish, and today we're down about 30 basis points on the SP 500. So we'll see what happens. Actually, I don't know. Who knows? Maybe we get a rally into close. We'll see. I'm not gonna stream the entire close. I'm just gonna stream up until the close. But we'll see what happens. What's going on, Ricardo? How are you? David Parker, Ruben, what's going on? Raven, Purdy. Not Purdy. Wolf of Amazon. Last night's game was pretty insane. It was like literally touchdown. I was like, whoever can score the last touchdown wins. I really thought the Bears were going to win that one. I thought that was going to be over right then and there in the last 8 seconds, but unfortunately not. I digress, though. Search problem, what's going on? Yeah, so we got a pretty decent show. Honestly, not much is really happening in the markets today. I mean, it's just been a bunch of just sideways action. I mean, yes, the SP 500 is down about 30 basis points today. It was down like 2 basis points on Friday. I mean, in the scheme of things, the VIX is at 14. Nothing really happens when the VIX is at 14. You got to look to the micros, not the micro caps, but like the actual stocks themselves, the companies themselves, to actually make the action. But you got that coupled along with the end of the year, where a lot of fund managers are basically not trying to trade in the last part of the year. They're trying to lock in all their gains, whatever it is. And on top of that, a lot of people are on vacation. Like, you're not really getting much movement, but it does actually set up for a large movement if anything actually does happen. And it's not in the equities market. The movement that we are seeing lately is actually in the commodities market. You've seen it with silver. Actually, wow, that is a very nasty daily engulfing channel right there. But if I'm going to short silver, it would not be here. I would not want to take that chance. I would actually wait until it shows a close below the 9 and 21 EMA, and then possibly below 20 MA. Because there was another chart that if you tried to keep shorting it over and over again, you just didn't get a chance until it actually below down these EMAs. And that was Iran. And I'm sure there are a lot of people that are waiting to short this. Oh, I'm not sharing my screen. I'm sure there are a lot of people that are waiting to short Iran. Actually, let me go to the silver chart. So you had the silver chart over here. A lot of people are like looking to short last night. Actually, in fact, the whole weekend, a lot of the posts that I was seeing was people trying to short or talking about shorting silver. And, while they might be lucky, best of luck to them. That's not really the name of the game. In fact, even Stanley Druckenmiller doesn't really spend his time shorting the markets or shorting any commodities, maybe some currency pairs, whatever that is. But technically, you're not really shorting a currency pair. You're actually, I guess you could be, but you're technically longing the other side of the pair, the inverse of the pair. But anyways, or what would they be? The contrapositive? I have no idea. But anyways, when I look at a silver chart, this doesn't look like it's a short to me. If anything, it looks like it's a fake out, a fake breakdown, right? And we've seen fake breakdowns happen many times in the entire stock market. And what we've seen was that some of these breakneck rallies can have these fake breakdowns where it looks like it's breaking down. It's actually not going to break down. And if you look at other stocks, right, that people was just waiting for it to break down, look at the Iran chart over there. Hold on. If you look at the Iran chart here, I mean, I certainly did not short Iran. In fact, I'm still long Iran. But look at this breakneck rally you have over here. And then look at this. Look at a similar setup you have over here. If you shorted Iran here, okay, you made money, right? But I guarantee you there are a lot of people who did not close their long or who did not close their short position. A lot of people who tend to short out of just like trying to take out Goliath, all right? Like you're David and Goliath, and then David is trying to take out Goliath. Like you see this candle right here, just like, oh, it's going to go down lower, right? And then you just basically slowly got your face ripped off over and over and over again until Iron made a new all-time high, which then they probably gave up by then. And then that's when it breaks down. But I would also argue, like, look, the time to short is not the top. The time to short is actually when it breaks and closes below the 9 and 21 EMA and preferably the 20 EMA on a daily basis, right? And I'm not financial advice. I'm not going to try to short silver, at least not right now. But that's usually when you want to short some of these stocks, right? If you look at silver right now, you have that it did not close, or it's not closed yet, but it can't get below the 9 EMA. So I would not short this stock. I think there's a lot more upside for shorts if they do wait and be patient. But let's take a look at what David Rosenberg has to say. They actually had an interview with him on CNBC, and I'm going to play that clip for you guys right here. Second, let me reshare this one right now. Hold on. Here you go.
President David Rosenberg. What message are you getting from the performance of gold and silver, David?
Well, it's one of these, almost K-shaped type of developments that we have, not just in the economy, but in the markets, that you never would have guessed that, gold in particular, because silver, of course, has industrial applications, but that gold would be up roughly 70% for the year so far, which is inversely correlated traditionally with the risk on trade. That you would have guessed that we'd be, challenging the highs on the S&P 500, gold up 70%, is one of these anomalies that I imagine will get resolved in 2026. I think the gold story largely is nothing about the economy or the financial markets per se, but just the ongoing rebalancing and diversification efforts by world central banks out of government paper, especially U.S. securities, and into bullion. So that's, I think, the big story there.
As far as the economic outlook, David, it's been another story of resilience in the overall economy. And I know that you see cracks below the surface, and you have for a long time now. But are you surprised at how well the consumers held up?
Well, it is surprising, actually. And I watch all these economists come on the various shows on CNBC and just talk about the headline number without talking about how we got to that headline number. So, let's take the third quarter as a microcosm. I mean, consumer spending in real terms, that was the big upside surprise. Real consumer spending was up at a 3.5% annual rate, which is huge. It's above trend. But we have to ask ourselves the questions as to how we got that sort of performance when real personal disposable income growth was zero. I mean, we had no real after-tax income growth, somehow supporting an above-trend 3.5% consumer spending. And of course, the fallout from that is that the savings rate fell like a hot knife through butter. So the big story for the consumer is that this is not an income driven story. Real income's actually, in real terms, after tax, after inflation, and after government benefits, has been flat 2 quarters in a row. And you got this consumer spending spurt by virtue of the fact that the savings rate has declined precipitously. And that's part and parcel of, again, another form of the K-shape, which is the high-end consumer. That's all part of the equity wealth effect on spending. We have, like we saw in the late 1990s, a huge equity wealth effect on spending that's overtaken the fact that real income growth has actually stagnated 2 quarters in a row. That doesn't get enough play.
Let's get to some committee moves.
All right, so basically what David Rosenberg is trying to say, and David Rosenberg isn't always like a short or a perma bear or anything, but he's always like kind of in the contra trade, right? Or the contrarian trade. I agree with him. I agree that the economy is K-shaped, where you have most of the spending being done by the upper class, which is the top side of the K, and you have real income growth, which is mostly attributed or dispersed around the entire population, is somewhat stagnant, right? So, I mean, I'm sure a lot of people, even in the upper class, have not necessarily gotten any raises in terms of real income, not like stock shares or anything, but actual income or base salary. And over the last couple of years, or at least maybe in the last year, at the very least. And if that continues happening, right, you're going to have the spending probably still continue because you have that upper side of the K continuing to buy stocks, buy real estate, whatever it is, continuing to appreciate all of their equities and all their assets, while the bottom K, who generally does not own many assets, suffers the tangent of pretty much the higher prices and so on, right? Even if we have disinflation, where inflation is still accelerating, but not accelerating as much, you're still going to have an increase in prices because inflation is still going up. Prices are still going up. It's just not going up as fast as it usually does. And if this continues to happen, which class can totally afford it? The upper part of the K, all right? And we are a consumption economy. And if consumption is still high, then the economy is still going to grow while the bottom side of the K pretty much suffers most of the time. So is this going to continue? How long is it going to go for? Well, I mean, this has actually been going on for some time. This isn't anything new. In fact, David Rosenberg was mentioning this was happening in the late 1990s. But he's just trying to call out is that not that we're going to get the bear market now, but that at some point, which I do agree with, it is all going to collapse. Now, the extremity of that collapse, well, that's really going to be what we have to wait and see what happens. Like, is the collapse going to be like a 50%, 80% drawdown the S&P 500 where real estate crashes everything? No, I don't think that's going to happen. I don't think any administration is going to want that to happen. And if that does happen, you probably don't need to worry about your stock portfolio at that point. You probably need to worry about not getting shot in the streets. I don't know. Maybe that should be. But that's just the way that I look at investing, is that the market is literally built to go up 90% of the time. But every single time you invest any dollar into the market, you have to account for that 10%, right? Nothing is guaranteed. And even the 90-10, right? Nothing is given guaranteed there in the near term. But over the long term, the market is built to go up. And that's the reason why I mostly stay invested 90% of the time. In fact, I never really hold more than 10% cash. And I've been saying that over and over and over again, maybe sometimes 15% if I see ample opportunity in the trading portfolio. But usually, like right now, 5% cash. Like I'm not really, and I'm not even like stacking cash around. I'm stacking cash around, taking advantage of. No, I'm actually pretty much fully invested right now, right? So usually when I have like 5% cash, it's because I'm trying to keep money aside in case I do find that opportunity. So that way, if I do, then I could start edging in a lot quicker than having like 0% cash where it would just be all DCAing at that point, right? I always add money in my portfolio every single couple of weeks, every single paycheck. Same thing, my kids' portfolio. I actually posted something from on X. Oh, I should share it right now. Yeah, so I posted something about a 529. And again, not financial advice, but I find that that wealth is built over time. Wealth is created over time, but like actually gaining a lot of appreciated portfolio is, of course, time. Time is the ultimate factor when you really think about building wealth. All right, so here we go. So we have 529s, right? So maybe they probably have something similar to this in Canada or anywhere outside of the US. I've been contributing about, one sec. Okay, so Basically, I've contributed about $6,000 to my kids' 529s. And my kids are pretty young. They're like around 5 and younger. And right now the balance is it's basically doubled since then, right? So my annualized rate of return over these course of these 5 years, and it's somewhat staggered because I didn't start both at the same time. Obviously, these kids were not born at the same time. I did start my daughters a little bit later, but I basically just put $100 each month for my kids' 529s, right? And a 529, if people don't know, a 529 is basically an investment account or somewhat similar to a retirement account for your kids, but it could be used toward anything that has to do with education. And people mainly use it for college tuition or whatever it is. But, I'm not going to hold my kids up to it if they don't want to go to college when they get older. That's totally fine. They don't have to go to college, but it can be used toward education, and you can actually transfer the owner of the account to another family or relative member and use it for their education. And the benefit of 529 is that any of the gains you get is not taxed. Like, obviously, the money you put in it is already taxed. So you're putting taxable money into it. So it's kind of like a Roth IRA when you really think about it, not a traditional IRA where it's pre-tax money you're investing in it. So you're putting like a Roth IRA where you put money in it that's already taxed. And then on top of that, any gains you get is not taxed, right? So if you're a billionaire in California, let's just say, and you want to take money out of a $1 billion 529 account, it's not going to get taxed, right? All right, maybe that's a bad example. That was a bad example. I don't want to trigger anyone in the audience, but like, it's not taxed whatever you take out as long as it's used toward education. And the goal of this is to not make it double in a year, right? In fact, most 529s, you can't self-direct them. You have to invest them like in like a 401k where it's like a select certain funds. But I shift funds around like twice a year. Actually, that's the max amount it can give me. And I've done pretty well with it. And I don't shift anything crazy. It's mostly invested in SP 500. But like halfway through last year, I decided to shift some funds more into the mega caps. This is like more actually, this is closer to around April. I shifted more into mega caps and more into small caps and mid caps. And it's actually outperformed the SP 500. And, that's not going to happen every time, right? And this also does go over 2022, right? So people who are invested for the last 5 years, they can't really say that they beat the SP 500, which had an annualized return of 13.5%, because a lot of people suffered a drawdown in 2022. And while some have, it's very difficult to do. It is very difficult to do when you can't invest in individual stocks. Well, basically, what I'm trying to get at is that time is the biggest wealth factor in anyone's portfolio. If we all had unlimited time, right, or decades, for example, and you didn't need the money today and you invest it, there's a pretty good chance you're going to have more money in your account as long as you were prudent with what you're investing in during that period of time, right? The S&P 500 goes up about 10% on an annualized basis. No, 7 to 8% on an annualized basis over the course of 100 years. Actually, I think it's a little bit more than that. And the same would be for my kids if it was 20 years, right? Maybe it's a much shorter time length, but the way that I see it is that the next 10, 15 years, 20 years are going to be the most ridiculous gains we've ever seen in the stock market, in my opinion. Not a straight line, but it will be somewhat beneficial. So that's what I did. And this is just the visual of the balance going up. So it's actually it's probably about the same level it is today. But yeah, that's what it is. Please consult with a tax consultant or whatever it is. Like, this is not financial advice. This is just what I'm doing. Of course, I don't need to really say that. So is it new Invest America accounts going to be better than 529? I don't know. I don't know the stipulations with that. All I know is that anyone born after a certain date is going to get $1,000. Whether you can direct that to individual stocks or not, who knows? Whether it's taxed or capital gains, I have no idea. You got to ask a tax guy. Donald Santa looking like Fred Durst with the beard. Actually, that is pretty funny. That is pretty funny. Hold on a second here. Oh, wow. Limp Bizkit. Let me actually pull up a picture of Fred Durst. Oh, wow. Wow. Okay. We got Donald Durst going on there. Donald Durst. All right. So, wow. What's MU doing? Wow. I wonder what MU's done. Let me go ahead and share the MU chart. Replace the screen. Here we go. Is the market picking back up? Okay, market is higher than where it was before. Let's look at MU. Actually, let's look at some stocks over here. MU. Wow, that's okay. For all you people out there, right? I had a small I had a small position in an inverse MU trade that I put on after earnings. I got my face ripped off with that, but it was like a 1% position, so not a big deal. But I have definitely closed that position the day after earnings. Like, I'm not going to hold that thing. That's insane. But I mean, it doesn't look like it's a total red day, right? If MU is up 3%, which is arguably the most cyclical semiconductor stock out there, one of the most cyclical ones, even SanDisk is down and MU is up. Right. I don't think we're heading toward a correction right now. In fact, I think I actually saw the market this morning. I was like, I wonder if they're going to buy this thing up throughout the day. And that's what it kind of looks like. You know, we're actually here around the mid to highs of day. We were down as much as 686. Whoa, where did my screen go? Hold on. Let me share that beast again. Where are we sitting on the daily chart? Oh, I hate when I have these bands over here. Yeah. All right, here we go. Bands to make good bands. Okay, yeah, so we're sitting like near the highs of day, right? This doesn't look like it's a massive sell-off. It just looks like a little bit of profit taking, low volume toward the end of the day. So if we look at the volume chart here in the S&P 500, yeah, it's a very low volume day. Like, look, we have 1 hour, less than 1 hour until the market closes, and we're not even like anywhere close to the volume we've seen before the last few days. So like, I wouldn't really worry too much about the price action. In fact, I think if there's anything, I mean, like even Tesla's a low volume pullback, even NVIDIA likely, yeah, low volume pullback. Like I wouldn't really worry. Oh, wow, Air Test Systems is almost the 19s. That's crazy. They actually had a pretty decent earnings too. Any chance you could cover Sentinel-1? I don't know. I don't really like covering Sentinel-1. I feel like I've talked about that ad nauseum. Maybe I'll talk about that one later on if you have some time. But let's move on to the next segment, guys. So we talked a little bit about silver and gold. I mean, we looked at the silver chart. I give my input on it. It's down about 7.5% today. You know, it was down almost 9% today. And like, what are you going to do? You're going to short this thing. You're going to pay so much for premium. In fact, the premium on this thing is probably super expensive right now. So NASDAQ, SLV, options, chain. Let's go ahead and look at the premiums for, let's see here. If I wanted to short the June 2026s, which is the closest date that I would do if I was shorting this sucker with puts. So at the money puts, it's trading at 65 right now. At the money puts is $9. So you need this to go down at least $10 to start capitalizing on it. Oh, sorry. No, it's $9 right here. So $8. It's just the risk reward is just terrible. I mean, even if you wanted to be cheap and buy further out of the money puts at $59, you still have to pay $5 of extrinsic value up front. So if you buy a $65 put, which is right at the money, you're basically paying about $9 in extrinsic value, right? There's no intrinsic value. So if we jump forward to like, let's say June, right? And silver is above $65, like this is going to be like $1 option right here, right? You would need silver to drop quickly. And even if you purchase the out of the money, $59, you'd still need like a dramatic pullback even to capitalize on it. And this is the reason why I don't like short things that are running so hard, because the IV is so high. Actually, I don't even have the IV on here. I wish I had the IV, but I'd imagine the IV has picked up quite a good amount in the last week or two, right? So depending on the volatility, whether it's an up and down direction of a stock, it does change the implied volatility. Of course, you got the Greeks or whatever, but then that would mean that, look, you're basically paying a lot of money up front just to short this sucker. So now if you're short the futures, it's a lot of leverage. Okay, so be very careful with that, because you can get smoked on that if it does go up back to flat by the end of the day. And on top of that, you can get margin called, and they're basically gonna take a lot of the money that you put as collateral on the side, take it back from you, or take that collateral out in order to fund the loss of the position. I don't know, guys. I'd say still be careful with that one. I mean, you know, like I mentioned before, if I were to short silver, I would definitely wait until we get a confirmed close below the 9 and 21 EMA and hopefully below the 20-day moving average, right? So we'll see what happens with that. Yeah, we got a good amount of people here. Great to see you, Mr. Evans, Stock Market News. We got 17 people on the Wolf Financial channel. We got 62 people on my channel. Just a reminder to you guys, I'm going to be streaming exclusively starting in 2026 on the Wolf_Financial YouTube channel. We're on both channels right now, but also if you are on Twitter, go onto the Wolf_Financial YouTube page. where we can check this out. Yep, I'm taking over. I'm taking over, baby. That's what I do. All right, so thoughts on Temir? We'll get a little bit into the Q&A later on, but I'll make sure to save some time to talk about Sentinel-1 and Tempest AI. All right, so the next part of the segment, let's discuss space and drones. Now, if there is a chart that actually looks pretty decent, I'm not going to lie, I've been like contemplating if I should enter this thing or not, is KTOS, right? So KTOS is it's more of a defensive drone play. They have a lot of government contracts, so on, yada, yada, yada. I don't want to get too deep into the fundamentals of this one, but I want to look more at the price action here. So we had like a swing low over here on KTOS at $69 and also $64. In fact, KTOS actually bottomed back in November and then made a higher low back here in December 25. It's making a series of higher highs and higher lows, right? So if we actually go up from here, which looks like a pretty good setup, we have the KTOS is finding support here on the 20-day moving average and could possibly close above the EMAs, but still needs a little bit of work to get back above $78, which is actually where it was just last week. So that's pretty interesting price action you see there. So if we look on the weekly chart here, KTOS is still looking pretty bullish, right? It did look pretty bearish the other week, but it's above the 9 and 21 weekly EMA. And it's right below the 20 EMA. If we look at the monthly chart still looks amazing. And this is an amazing chart. You got a lot of support here, guys. You got a lot of support here in KTOS. We also got to think about what's going to happen in 2026 is that there's going to be more funding toward government contracts, right? So if you have a lot more government funding, especially toward drones, okay, now quote unquote, because I'm not an expert on this, but we've seen a lot of activity in the drone market recently, right? And also governmental or space, right? So you have D-Pro actually maybe didn't look as good as it did before. You have ONDS continuing to rally in the face of these crazy moves at SP 500. There's also Rocket Lab, which was green earlier. Yeah, it was like green earlier, but still the chart looks pretty good if I look at the daily chart. You have ASTS, which I believe is green today, about 1.5%. Obviously, this is not necessarily a governmental company, but they are involved, I believe, in the Golden Dome as well. It's got good prospects. I mean, the ASTS play was back here when I was calling it at like $20. Now it's at 72. I think we need a little bit of time for valuation for fundamentals and financials to catch up with the valuation. Like I don't think anyone's going to tell you to buy like leaps on ASTS right now unless it's some sort of short-term play, whatever it is. But I'm really sticking to more of the thematic stuff right now, and I am looking for a drone play. I was like in a swing trade recently, but I stopped myself out. But I mean, I'll still wait. I mean, it is toward the end of the year. It'll be very difficult to gauge exactly what's going to happen, what's going to be working toward the end of the year. But I do think a lot of next year is going to be more of the value stocks and a lot of the companies that are actually returning free cash flow profitability as well as bottom line profitability to its shareholders. So we will see what's going to happen with that one. A very short segment to talk about that one. I did want to touch on it. Obviously, we have the biggest IPO ever for SpaceX if they do IPO at $1.5 trillion next year. If they do IPO at that level next year, then that will be the largest IPO. And there's a lot of excitement that's going to head up toward that. Actually, someone did mention this. I do. Oh, wow. That's finding a lot of strength there. Why is it up 31? I mean, I guess it's like a little bit of bounce here, but like what's the market cap of this guy? It's a $90 million company, right? So I'm pretty sure there's even people in the audience who could possibly move this stock up if they felt like it. So I'd be very careful with that one. If you're small money, obviously if it's a long-term perspective, then maybe if you're in a trade, maybe. But like, dude, this is a $90 million market cap. This could be a hedge fund that could just smoke all of you guys right now if they felt like it. So I'd be careful with that one. Anything less than $1 billion, or I would even say like $3 trillion, $3 billion could be open for a lot of manipulation. So I would be very careful with that one. ASST. I'm not in this one, but I know there's like a big crowd involved in it. Don't want to name names, but this isn't looking so great. $670 million market cap. So be careful with that one. Maybe I haven't looked into this one, but I mean, you never know. But at the same time, $670 million market cap, you got to be careful with these sub $1 billion market caps. If I'm going to stay near something, I was calling this out. Last month. Did a little bit of high level DD on it last Friday for that 2-hour segment, which I hope you guys enjoyed. $21 billion really isn't much to manipulation. If anything, actually, the volume is pretty low. This is a very low volume pullback, which is good to see. SkyT, something I'm pretty bullish on, is less than $1 billion market cap. So like time is going to matter on something like this, right? So Rocket Lab is not the sub $4 billion company that used to be. This is a $37 billion company, but there is a lot of trading going on with this one. So be careful. Bullish on Rocket Lab long term. Short term, I don't know. It's at $70, guys. Like this thing was trading at $4 like not more than 2 years ago. So, be careful with a lot of the stuff that has ran pretty considerably. NVIDIA, I mean, this valuation versus Costco doesn't really make sense to me. I guess there is somewhat of a pricing power because a lot of Costco goods can increase with inflation, or whatever they want to do as far as demand goes. NVIDIA, the demand is only going to be paired on something like this because a lot of the pricing comes with the heightened demand for their Blackwell chips and then soon to be Rubin chips. But there will always be demand for NVIDIA chips because people will always need the best of the best. And the one that's heightened in demand the most is high bandwidth memory, as we're seeing it right now. And that's probably the reason why you're seeing Micron up 3% today, which is actually more than what we saw earlier. Pretty crazy stuff. So let's take a look at Broadcom here. So I shared this. Where is it? I shared this post earlier this morning. You basically had Citibank come out with their upside or with their estimates as far as ASIC revenue from Broadcom comes from breaking down end of next year and end of 2027. And this is pretty insane. I mean, Google accounts for $12.8 billion of revenue for this fiscal year. Sorry, I think they're doing calendar year. AVGO earnings. So did they are they still in 2025? Okay, they're still in actually, no, they just reported Q4 fiscal year 2025. So that actually is over. So we would actually see the real results of this number by the same time next year. They're basically going to double the revenue from Google by next year. They're going to get $20 billion from Anthropic, right? Does Anthropic sound like OpenAI? No, it does not. Very different, very different. So why did the stock fall after earnings? It was probably a lot of its valuation. It ran pretty hard. I thought the momentum was still there. Apparently I was wrong. It's all good. But even look in fiscal year 2027, right? So they're going to grow revenue by about 200% into next year. And then they're going to grow revenue by an additional 100% going to the year after that. I don't know. The company sure seems undervalued for me, right? If you are basing it on these metrics, but the market doesn't believe it's based on those metrics. In fact, Broadcom, oh wow, it actually recovered a bit from the 320 area. So Broadcom is a $1.66 trillion company, and their ASIC revenue is supposed to be at $100 billion, and this is just for ASICs. They also have other segments in their business. If I look at AVGO, Carbon Finance has a lot of good charts to break things down. No, AVGO. Let's look at Fiscal AI. Why not? Why not, right? I'm so used to it already. I'm going to just use Fiscal AI. So let's look at AVGO over here. Let's look at segmental revenue. So I will do annual, which is good. We have it already over here. So they have semiconductor revenue at $36 billion. They have infrastructure revenue at $27 billion. Is that right? Okay, I guess that's right. So we're looking at $63 billion in revenue. So $36 billion, and let's assume, actually not assume, we can see that, let's see here. Why do I keep on losing all my posts all the time? All right, so we have $14.5 billion in ASIC revenue. And I believe that, so the city is estimating that ASIC revenue is going to triple by next year. So let's just assume that this jumps up to about $100 billion in total revenue by next year. And that's like the lower estimate. That's assuming that we're not going to see any growth in infrastructure revenue. But if we look at the growth rate for infrastructure, that grew about 25%. And then semiconductor grew at 22%. So let's be a little bit conservative here. So if the semiconductor revenue grows to about $40 billion next year, and then we have infrastructure revenue growing to about let's say $30 billion. That's $70 billion. And then let's add the $35 billion that's coming from the ASIC revenue growth. So that would be the differential right here. So that would be about $105 billion next year, which means that the company is trading at a 16 times forward price to sales for next year. That's pretty expensive, but that also means they're going to deliver more to the bottom line. Oh, wow. Why can't I get the income statement for that one? That also means that they're going to be delivering more to the bottom line, and their margins might actually go up for next year. Let's see here. So net margins for Broadcom are at 47%, which is pretty extraordinary, especially when you think of the demand for ASIC chips. So there's a possibility they could expand margins next year. Yeah, this is on the quarterly basis. That's good. So margins went from 29% to 36%, 33, 26, then 47.3%. So if margins actually did expand this quarter, if margins actually continue expanding, which would be pretty wild to think. I mean, they're not totally a semiconductor company. 68% margins for a hardware company is pretty good. But again, they're not totally hardware. In fact, half of the revenue is basically infrastructure, which could include some hardware. We got to remember that Broadcom does have a software segment. They did purchase VMware recently. So these margins are considerable high. As long as they keep these afloat and the operating margins above 40%, net margins above 47%, I still think that it's got some room to go up there. Now, am I long Broadcom? Not really. I think when I think of the ASIC market, it would probably be Google. I think Google has a lot more upside because they're very diverse when it comes to their entire business. They have the TPUs, which supposedly OpenAI is going to be buying some TPUs. I don't know if they got debunked or not, but I'm pretty sure there's going to be buyers for these TPUs outside of Google on its own. They're the best. They have the best chatbot that's out there, the best LLM that's out there, which is specifically Gemini. And Gemini is starting to take more market share when it comes to all of the LLMs. So I did share this chart over here. Where is it? Here we go. So the generative AI traffic share for Google is only growing, right? So out of all of these companies, there were a few other companies, actually specifically publicly traded companies, not all of these companies. Google did grow, or Gemini did go from 5.4% to 18.2% of Gen AI traffic in the last 12 months. OpenAI went from 87.2 to 68%, right? Microsoft is basically stagnant. And then, of course, you have your other non-publicly traded Gen AI stuff, which I don't really like to factor in because, like, you can't really buy these companies in the public markets. You can only buy it in the private markets. Holy cow, I had 50,000 views in that one. That's really good. But, I mean, Google, the valuation for Google is not the demand of what you're getting in the long run. Now, I'm not going to go out there and buy call options on Google. In fact, I don't really own any Google right now. But I mean, if you're like if I'm a long-term investor and I want to invest in something, probably have a higher ceiling than a lot of other stuff, it would probably be Google when it comes to the TPUs and also the diversification of its entire business. Plus, like, what is it, like near 50% gross, near 50% operating margins or EBITs? I don't know. 30 to 50% is pretty astronomical for a $3 trillion company. So we'll see what happens with that one. All right, so that will be it for Broadcom. There actually is this portion of Zeta I wanted to bring up. I know a lot of people want to hear about Zeta. It's been talked about a lot this weekend, but there is this clip from CNBC that I watched this back in October, and I was like, wow, that's like pretty interesting to start to look into Zeta. And the reason why I did this post was because, like, just because you're bullish something doesn't mean you have to buy it, and just because you want to buy something doesn't mean you need to buy right now. And I just waited for certain levels in the company, looking at the charts and whatever. The 15 to 17 seemed like it was pretty good to start edging into this company. And being patient pays a lot of dividends, right? So when you're patient and waiting for lower prices, you increase your margin of safety. And on top of that, it gives you more time to do more research on the company to solidify your thesis. Let me go ahead and play this clip from CNBC CEO. This was actually back in October, so obviously a lot has changed since then. They had their earnings and everything, but I'll play this for you guys right now.
quantify what AI and those tools you just talked about, David, mean for your bottom and top lines?
For every dollar a enterprise client spends using our AI and software, we return $5 to $7 in revenue today. Our goal is to continue to evolve it. We made a very large deal last week. We bought Marigold's enterprise business. And part of that was a big loyalty platform. So we're now going to be able to ingest SKU level data. What are people buying down to the item to train our algorithms? And our goal at Zeta, even though at $5 to $7 return for every dollar that's spent through us is 100% higher than our next closest competitor, we want to get to a $10 return using our data and our artificial intelligence to more efficiently run things.
David,
is it possible to quantify what AI and those tools you just talked about, David, mean for your bottom and top lines?
For every dollar a
Man, I always do that. I apologize. Yes, I'm muted. I apologize, guys. I keep doing that all the time. So Zeta, basically for what this video, what David Steinberg, who's the CEO and founder of Zeta, what he was saying, actually, is he the founder? I'm pretty sure he's the founder, right? Such a dumb question. No, he's not the founder. Or is that the right Zeta? Okay, he is the founder of Zeta. I was like, what? I don't know. Maybe I was thinking about something else. I know I'm muted. I know I'm muted. I'm not muted anymore. There's a little bit of lag time with the video and whatever. All right. I'm sorry. Yeah, that's a cool picture, dude. So I lost my train of thought. I was on a roll until you guys told me I was muted. But thank you for telling me. I wish the gap between, or I wish the latency between when I'm actually talking to when you guys are seeing it live was faster, but it's not. So I lost my train of thought because I missed that. But anyways, Zeta is a marketing company, okay? If we have a slowdown in the economy, marketing is one of the first budgets to get cut. This is the reason why advertising companies and whatever get hit the hardest in terms of an economic slowdown. Let's take, for example, this, all right? Right here. Let's take a look at this chart. Let's remember our beautiful company, AppLovin, right? Last April, I know there were short reports and whatever in the stock, but when there was a fear of recession, AppLovin went from $540 to $200, right? That was the time to buy AppLovin. Anyways, let's look at Reddit. These are high growth stocks, whatever, but generally advertising companies tend to be high growth stocks. Reddit went from $230 down to $80. Okay. TTD still trading around the lows, but TTD went from $140 down to $44. All right. Unity, which is technically not an advertising company, but arguably that's where the moat is coming to. It's at $45. What in the world? Unity went from $30 to $15. Meta went from $730 down to $490, right? These are generally advertising companies, right? Let's look at Zeta. Zeta went from $26 to $11, right? Marketing companies. And it's a good example of another marketing company, which is a marketing platform, but not so much a marketing company on its own. Klaviyo, whatever you pronounce it, they have a marketing platform as well. They went from $50 down to $25, okay? There's a lot of crappy charts out there, but guys, these are not recession-proof stocks. Zeta is not a recession-proof stock, okay? be mindful when you invest in this stuff. Don't think that it can keep going up, right? I love the price action. I love it. I am bullish Zeta. I have call options on it. I love the company, right? I'm bullish on it. I'm not, you have to understand the risks when it comes to stocks. You need to understand the sector it's in and how any external factors, which is outside of the company's power, which includes the economy, will affect stocks or specific companies more than it does for other ones, right? Procter and Gamble is not affected that much by the economy. In fact, it is a risk-off stock that usually gets bought. Oh, that thing actually did not get bought up last April. That's interesting. But anyways, I digress, guys. Zeta is a growth stock. Keep in mind when you buy it, but I am bullish Zeta. It is 10% of my portfolio. I kid you not, it is 10% of my portfolio as it stands today, and 10% of that is in options. And the reason why I'm bullish Zeta is because one, you had David Steinberg, who's the founder and CEO of Zeta, talking about the profitability standpoint. And this is back in October when they said they just started to acquire Marigold, right? And then you guys saw the news, right? About a month ago, Zeta came out and they raised their guidance as a result of the Marigold acquisition, right? So it was an announcement. It was not a presentation. Zeta is going to be at CES, which is going to be pretty cool. They also, because of their platform, they're able to actually see more activity in the economy. Actually, I think they have like a Zeta Economic Indicator, ZEI, which David Steinberg did talk about that in the interview. But they raised their guidance. This is after they reported earnings at the beginning of November. They re-raised their guidance after that, following the completion of the Marigold acquisition. And guys, this is a profitable company, right? So I think 2026 is going to be a year where, like, look, I don't think 2026 is going to be a full-on year for non-profitable or companies that are burning cash on its balance sheets or its cash flow statements, companies that are not profitable or pre-revenue. I don't think that it's going to be the year with those stocks 100 times. I think we already had that time, right? I do think the companies that stand out of that group are still doing well today, namely Rocket Lab, right? Rocket Lab is not a profitable company today. But I think there's a lot of themes going on for Rocket Lab that keeps the stock afloat. But I do think it needs time for the valuation to catch up with its financials. For its financials to catch up with its valuation. It trades pretty expensive today, but eventually they will become profitable and grow into their valuation. So I don't think the stock is ever going to be fair valued. I think it'll always be a company where it gets a lot of retail hype and whatever it is, and it'll always be get its premium from that. But I do think that companies like Zeta, Adobe, or UiPath, or even On Semiconductor, and a bunch of other companies I can think of off the top of my head, Amazon Meta, whatever it is, I think that these are the kind of stocks and companies that will do very well next year because they are already returning money to its shareholders. But there's certain companies within those segments that have more risk than others, right? Amazon, if we have recession, will be able to survive recession. Zeta, I don't know. I think this company was founded in 2016. We don't know if that's going to survive recession. Now, the question is there going to be a recession next year? I don't think so. I think it's going to be the opposite of recession. I think we're going to continue to accelerate GDP, and I think GDP is going to surprise to the upside continuously every single quarter, next quarter. But I do think that Zeta is going to be one of the biggest beneficiaries of that ongoing S-curve, of that ongoing, what's the name of that cycle thing? I don't know. I can't think of it off the top of my head, mostly because I'm nervous because I have 100 people live in here, which is awesome. But I am very bullish this company. I'll get a little bit more into that in future streams as well. And then there's also UiPath, which a lot of people are also bullish on as well. I don't like the fact that everyone's talking about these stocks, mostly because when a lot of people talking about it, its price movement somewhat masks the actual fundamentals of the company. And that's just the way the stock market. But then there's also the other side. People say like, this is actually a terrible company, blah, blah, blah. I personally don't see it. I see this company as actually undervalued right now. I think that I think that it will return to a fair value estimate at some point next year. And at that point, I'll probably scale out of the position because while I am bullish on this company long term, I think there will likely be other stocks that have more upside risk reward later on. But until then, I think this company is going to like $45. All right, so we got actually I talked about Zeta, I talked about semiconductors, talked about MU. I think that's about it for what I was going to take a look at. Now let's go back to someone asked about Sentinel One. I want to go back to Sentinel One. Where's that comment? I wanted to give a kudos to that one. I can't find it. Someone asked about Sentinel One. I don't know if you asked about Sentinel One, you're still here. Give a shout out. I'll throw it on there. But I wanted to talk about Sentinel One because I have studied this company a lot in the past, and I'm no longer a shareholder anymore. Mostly out of just non-performing the way that I thought they would, especially after the CrowdStrike outage. But if you guys remember, let me take away these indicators over here. If you guys remember back, wow, August 2024 is more than a year ago. Pretty insane. August 2024, CrowdStrike had a massive outage that took down 30% of all the Windows systems around the entire world. And a lot of those systems were Delta Airlines, and a lot of airlines, they had to ground a lot of airplanes because of the incident. I don't want to get into the technicals of what happened here, but it had something to do with the kernel of the system, basically the part of the operating system that helps boot up the rest of the operating system. CrowdStrike caused an issue, which basically prevented the computer from booting up. So it went into a boot loop, right? It just kept on rebooting over and over and over again because the system couldn't start up. And it required a massive rollback with all these systems, which required a lot of manual intervention. There was a massive outage, whatever. CrowdStrike went all the way from $400 all the way down to, I think it went, there was one day where it went below $200. And it was a time when there was so much uncertainty as far as like, what are all these clients going to do with CrowdStrike? What about the diversity of cybersecurity systems? This is now the time for Palo Alto, PanW, or Sentinel to really take advantage of this moment, right? This is a time for the CEO of Sentinel One and the CEO of Palo Alto to come in, who are very strong competitors in the endpoint client management market or endpoint security market, to come in and take advantage of this window of weakness for CrowdStrike from them, right? So did they do it, right? I bought call options on Sentinel One around this time because I saw that as an opportunity for them to take advantage of. Sentinel One actually went on a decent run around that time, right? So if we go back to August 2024, Sentinel One went all the way down. This was in the yen carry trade crisis, went all the way down to 19, went all the way up to $30, right? I sold a little bit too early on that one, but still made some money on it, but I still held some shares, right? And there was a window of weakness for this company to come in here and take that demand from CrowdStrike. Not all of it, they just did a little bit, right? CrowdStrike is a multi-billion-dollar company. Sentinel One was $1 billion revenue, right? So if I look over here at my cybersecurity, here we go, cybersecurity. Okay, so if I take a look over here at Sentinel One, I'll open a new one for you guys so that way you can take a look right here. I'll look at the last 12 months. I don't want to be software is cyclical, so I don't want to just take a look at one quarter. I want to take a look at the last 12 months. All right, so they're not even $1 billion in revenue, which is fine. They're a small company, right? If we take a look over here at 2024, 38% revenue growth last 12 months, $723 million. The next quarter, they were actually, this was their moment that they were able to take advantage of CrowdStrike, right? They did not beat, I mean, their revenue did not accelerate that quarter, but they provided decent guidance. And I believe, was that? Yeah, that was when it continued its uptrend, right? And then it was up until the second quarter, the second full quarter after that cybersecurity incident from CrowdStrike, that the market expected them to show some good numbers. So that was December. I think this one covers it. Okay, so this was, deceleration. Yeah, it was this quarter. The market didn't like it. The market didn't actually, hold on a second here. this reported, okay. Okay, so this was the December quarter, right? This was the quarter that they reported on right after the incident, and the stock was still rallying, and then that was back here. Yep, that's what it was. All right, so August 2024, okay. And when they came in with that December earnings, this is when I was severely disappointed because there were lots of talks in the previous quarter that they would be able to take advantage of this opportunity, take customer share. They're in talks of acquiring customers, whatever, from CrowdStrike, without actually mentioning CrowdStrike. They took stabs at CrowdStrike, whatever, not Counter-Strike, CrowdStrike, whatever it was. And then the next quarter, they decelerated revenue again, right? So they already had one deceleration. They provided good guidance. They missed in the top line. They barely made the bottom line, and they missed in revenue. On top of that, operating margins are still negative. Even after a year, they're still negative, right? You should be a profitable company after how many years of being unprofitable. And diluted EPS, they're still unprofitable, of course. Free cash flow, they are free cash flow positive. But if I look specifically at that quarter, free cash flow is positive. It did go up that quarter, but like they actually became free cash flow positive, which is good to see. But I think what the market didn't like was that, hey, how come you're not growing your numbers? How come you're not getting a lot of clients? How come this? How come this? And then they kind of gave the same answer that they gave the previous quarter, right? Where it's like, oh, we're in talks. And I think the market just didn't believe them. And I didn't believe them anymore after that. I was kind of disappointed with that. And just been in a massive downtrend since then. And that's the reason why. That's the reason why for cybersecurity, SentinelOne is one of the cheapest cybersecurity stocks out there based on this chart. SentinelOne has 24% growth. So not only they continue to decelerate growth, but their free cash flow margin is only 7%. And they actually trade pretty cheap, very cheap compared to CrowdStrike. Very cheap. CrowdStrike has a rule of 50 though. So I mean, you can't really argue with that one. But look at Rubrik. This is the reason why I favor Rubrik over it, is because like they actually have a higher free cash flow margin and they're going to be profitable. I think 2026, they're probably going to be profitable. I think SentinelOne is a pretty good valuation considering what you're getting today. But Rubrik is a good buy today. But SentinelOne is like, dude, what are you guys doing? Like this is what happens to a company that doesn't inflect on profitability at any point over the course of many years. This is what happens when the market doesn't believe in management. This is what happens when shareholders vacate. And this is what happens when no one wants to buy your company, right? We already had that excitement over here back in July 21, where it was like they were in talks of getting acquired by Palo Alto. And then Palo Alto went out the next day, was like, we're not looking to acquire SentinelOne. I personally don't see that as a good move for Palo Alto, other than just acquiring its assets and basically just taking away just like stripping the company of all of its assets and whatever, and taking all of its clients, whatever. Other than that, like I just don't see this company coming back unless like they turn it around. And there's no way to know that until we have a good earnings, right? Every single earnings this company has had, it has not done well after the earnings. And there's a reason why, because the market doesn't like the company. They don't believe in management. They don't like its non-profitability standpoint. They don't think the company's really going anywhere. And then take the other side of that, CrowdStrike, they keep executing. And the stock is basically just going up, right? So the difference between SentinelOne and CrowdStrike is a much larger company. It's continuing to expand its entire product horizontal, the amount of products it has in different verticals. It's continuing to be a great company that's continuing to execute, and SentinelOne is not. The last one we wanted to talk about was someone asked about something else. Oh, not Saidu. No, I think that was it. Oh, Tempest AI. You know, pre-revenue, cash burning company. It's not there right now. It was from here all the way until here, but like it's just not there. The chart looks terrible. There's really nothing to say about Tempest AI. I mean, if you want to buy this company for like the total long term, like decades, you're probably going to do just fine. I don't know. It's really hard to tell at that point, but something tells me Nancy Pelosi sold out of this baby right here. And if she did, I would not want to own this stock if she sold out of it, because that would be the only reason why I'd own it at that point. I mean, fundamentals are pretty good, but like on the short term, I don't know. The market hates this thing. We'll see. I would actually, if I were to buy this one, I would want to wait to see it recover some moving averages. But look at all these moving averages curling down. You got the 20-day curling down. You got the 50-day curling down. The 100 days about to curl down. The 200 days is going to curl down soon. It's trading below all the EMAs. This chart just looks terrible. Reminds me, where's Rubric at? Looks better. Looks better. Could look better, but it looks better. Still, yeah. I don't know. Like this doesn't make sense to me. They had a really good quarter last quarter, but I don't know, guys. I'm at the stock market. We'll see. Man, I really jinxed myself, didn't I? Well, not myself. I don't have any trades in Bitcoin right now, but man, brutal. At least BMNR is green today. They did staking of like $200-400 million over the weekend. Pretty interesting to see, but we'll see, guys. Oh, man, I thought we were going to get bought up to the end of the day. Where's Pat at? Flat in the day. Zeta is down 1.5%. Better than where it was this morning. On Semiconductors recovering a little bit. Yeah. Ooh, Lemonade is almost back in the 60s. Interesting. Yeah, we'll see what happens with that. Do I hold any Rubric? Yes, I hold a lot of Rubric. All shares, though. No call options. All shares. Bullish in the company. I could probably go into that one next time. Anyway, guys, appreciate you guys tuning in. Y'all take care. I'm going to end it here. I'm going to have to do this last play right here. No, that's not the one. Yeah, Caleb Williams he's a good QB. And I really liked how he shook a lot of people's hand on the Niners after the game. Like he wasn't salty or anything. Like I kind of like the good sportsmanship, right? Where's the video? Where's that video of the last play? Okay, that's the one. Okay, that's the one. Okay, I'm gonna play it right now. Man, brutal way to end the game. I mean, it is what it is, but yeah, that sucks.
4 seconds left. 2nd and goal. Here is Williams. He's got to throw it to the end zone. Clock has expired. Williams keeps the play alive. He's looking. He's got to get rid of it. Retreating. He throws. Incomplete. It's over.
You know what? They were playing in Niners territory. They had the upper hand here, but like this game was literally just like touchdown after touchdown after touchdown. Like, I remember watching the first. I lied. I didn't watch the first 2 minutes of the game, but the first 2 minutes of the game, Brock Purdy threw a pick six, meaning that he threw the ball, it got intercepted by the Bears, and he scored a touchdown. And I was like, oh wow, that is the worst way you can start a game. And then they won. It was an 80-point game. 80 points. 80-point football game. I don't know. I am looking forward to this playoffs, right? This is an exciting season for football right now. We got the Rams playing the Falcons tonight. I don't know how good a game this is going to be. The Rams are going to win. The Falcons just do not have it this year. We'll see.